Hey guys, we are back again with another Bitcoin special. Specifically, Dean McRae interviews and gets to learn and understand everything about Bitcoin with our resident expert, Stephan Livera. Hope you enjoy.
All right, guys, welcome. Bitcoin for Idiots, Volume 4. How you going, Stephan? Nice to have you again, mate.
Hi, Dean. I'm doing well. Hope you are as well.
Mate, yeah, life's all right. We can't complain in this coronavirus time, but it's nice to have you on, and we're having a bit of fun with this series, or I'm having fun anyway. I'm learning a lot, and I guess I spoke to a lady this morning who's coming on next week as well. She's an author and wrote a book called The Chinese Pandemic, or The China Pandemic, anyway. And she's going, oh, so how does it all work? And I sort of explained, I said, mate, I'm learning a shit ton from doing this, so it's a good experience. Mate, Bitcoin for Dummies, that $10 of yours has grown to $11.21 for those watching. Hey, look at that, we can retire on that. But I mean, as a percentage, that's pretty impressive, really. Like, you know what I mean? It's not $10 to $1 million. I had an auntie who rang me about it this week, and she said, I got an email from a Bitcoin company, and I went, okay, right. She said they promised me $13,000 if I gave them $100. I said, I hope you didn't give them $100. That sounds dodgy as shit.
Yeah, that's right. There are a lot of scams in the space, so you have to listen to trustworthy people and go to trustworthy, products and exchanges, and then eventually, once you get that out and pull it and hold it yourself, then you're not having to trust that exchange. So that's the way to go about it.
You get used to the idea. So I signed up for HODL this week and had a bit of a navigate around there. It looks like an interesting site.
Yeah,
so that'll be fun. So, mate, look, we've been thinking about it. We've been talking about it. So now, monetary. I was speaking to somebody today about money in general. That really, an Australian $100 note is of no more value in reality or in tangible value than a monopoly $100 note. Really. In my head, it's not backed by anything. It's not promised by anything other than the government saying we approve this particular piece of paper being worth $100, which means what? Nothing, something. How does Bitcoin fit in around that concept? Do you, in your area, obviously you know a lot about the monetary system. How does that all come together? What are your thoughts on that as a concept?
Yeah, that's a great way to frame it. So one way to think of that is all value is subjectively perceived. It's like beauty is in the eye of the beholder, right? It's like whatever, that's really all there is in terms of value. There is no such thing as backing, right? And the funny thing is a lot of people don't really get this because they think that, say, the US dollar is backed by gold, and it's not. That hasn't been true for a long time.
Once upon a time it was, though. That's how they built this system up. There was a percentage of gold or precious metals that had to be held relative to how much money they printed. Is that correct?
Correct. And so that used to act as a check on government spending. Then in 1971, the US government did what's called closing the gold window. Now, that was meant to be a temporary move, but it has been a permanent move, basically. So now, for about 50 years, the world has been operating on a totally fiat money standard, if you will, that there is nothing back. It's not like you can take that US dollar to the window and try and claim gold back for that. That's just not how it works. Nowadays, it is just freely floating.
So the key word there you just used, sorry, I'll interject. Yeah. Fiat. Now, for those who are watching this who don't know what that term means, what's the simple way to explain fiat money? I mean, I would explain it by saying it's really no more valuable than monopoly money.
That's right.
The more technical side, or the more correct side, would be.
So it means by decree. Basically, it means it's like the government is just saying, I decree this is the money of the land. Now, this would contrast. So you might think of that like what's called a charterist theory of money. Like if I'm the king or I'm the government, I'm saying this is the law of the land, this is the money of the land, fiat money, use this money. That's one theory. The other theory is more like an emergent bottom-up theory of money. It's that we don't actually need to explicitly agree on what the money was. It's just that there are all manner of different goods out there in the world, and they in some sense, compete to become money. And the ones that are more saleable and more easily marketable have that tendency to, in the longer term, win out in the market for money. And so that is why historically gold and silver and so on were money, because it helps you fundamentally solve what's known as the double coincidence of want problem. So if we were to trade, you would want exactly what I have, and then I would need to want exactly what you have. But what if we could use this intermediate good, money, to be that indirect medium of exchange? And it just so happens that all different goods have different characteristics about them that make them better or worse at being a good money, right? So if you think
I have a dozen eggs, and you have a bunch of carrots. I'd like to trade your carrots for my eggs. Done deal. And what we've done in replacement of that is the supermarket has a dozen eggs. So if you want them, instead of you going and giving them your dozen carrots, you give them $5, $6, $4, whatever it is at any given time. And that's where that change has happened, I suppose.
Right. And it's because we needed something in between. So a quick example might be, imagine I make something that's really difficult to cut into pieces, right? So maybe I make bicycles and you make eggs. And I want some eggs, but I don't necessarily, like, if I cut the bicycle in half, that's not very valuable, right? Like, it's not divisible. Get me?
Yeah.
And it makes sense that the money should be having a high weight to value ratio. And that's why gold is quite heavy, right? Because, like, imagine if we were using grass as money or hay as money, then to bring enough that was worthwhile for you to trade, I'd have to carry around like a whole cart of grass or hay to give you to use as money. So it kind of made sense that, it is easier to use as a money if it's heavier per value and has these other characteristics, right? Now gold has all these characteristics that historically made it good for money, right? So it was more easy to identify. It was difficult to destroy. It's hard to counterfeit. It can be counterfeited though, but it's kind of difficult to do that. And it is easily divisible, like we were saying, and it's scarce. That's another very important part, is that it's not so easy to make gold or mine gold. And so that acted as a way of sort of the market selected the best money over time. Now, we believe that Bitcoin has sort of like the characteristics of gold in some ways, but actually is an improvement. It's like a step function improvement, because now you can send it anywhere around the world. Whereas historically, if you wanted to send gold around the world, you either had to wait a long time and hire security guards and do all this stuff, or you had to trust a custodian, right? Like if we use some gold vault and I say, let me transfer, 2 ounces of gold in my account over to Dean, and now Dean has those 2 ounces of gold, but in reality, you're still having to trust that gold vault. In the Bitcoin world, when you hold the private keys, you don't have to trust. You can spend and you can control those Bitcoins yourself without relinquishing that control to a custodian or to a bank or to a vault. And so that's really the power of Bitcoin. And the other key part is Bitcoin has been designed to be specifically limited in supply. There will never be more than 21 million Bitcoins. And so it means you can think more clearly about what percentage of the total supply of Bitcoin you hold. When you hold, like, for example, if I hold 1 Bitcoin, that's 1/21 millionth of the total
of the currency.
Yeah. And whereas with gold,
that's pretty exciting, really.
It can be mined over time, right? Yeah. And with the US dollar or with the Australian dollar, it's constantly being inflated. And so basically your wealth is being stolen from you in a very hidden way. Whereas those people who store value in Bitcoin over the longer term can more easily store their value. So that's one of the key points there as well. Does that all sort of make sense to you at that point so far?
For me, it sure does. I mean, when I look at, and I talk to people about these things, I look at $100 bill. There's nothing at the moment stopping the mint from printing more. Now, Pauline Hanson, funnily enough, early on in her political career, when asked about things like that, one of the gaffes that a lot of people sort of took the mickey out of her on was that she just said, well, if we need more money, I'll just print some if I'm in charge. That wasn't quite verbatim, but, the general gist was we'll just print more. And funnily enough, all the current financial issues That's sort of what they're doing. There's nothing behind it other than a government saying, or a Federal Reserve, which is even scarier, saying, yeah, no worries, we'll put more of these $100 bills out on the street, which tangibly it's just glorified paper. There's no limit to it, which decreases its value. Over time, it has to decrease in value. It just has to, because there's so many of them. So
Exactly.
having that limited amount there means that it will eventually become more and more valuable as more and more people want them, to my understanding. And I'm not an economist by anybody's.
For sure, yeah, and I think you've got it right, because ultimately you have to think about what are the likely outcomes of all of this. The likely outcomes of a lot of this stuff that's going on now, governments and the world is in a lot of debt. They are not going to repay that the honest way. They're either just going to not repay it, or they're just going to repay you in a dishonest way by repaying you back in money that is worth a lot less than what it was when they took out that debt. So if you're smart and you're thinking about what are the possible or probable ways that the government is going to respond, they're probably going to print. It's becoming very popular now, like this whole UBI, Universal Basic Income, MMT, Modern Monetary Theory. There's a lot of money printing going on, and the central banks around the world are trying to do everything they can to try and keep the house of cards going. They keep buying stocks, or they keep buying these bonds, they keep buying these toxic assets, and basically bailing companies out and bailing out, the whole, trying to bail out the whole world at this point. So they are driving a lot of this huge bubble that we're seeing. And so fundamentally, really, the only alternative way out is with an alternative parallel financial system, and that is Bitcoin, that you can opt in and exit the fiat system in that way.
Which is pretty exciting. I mean, in my very simple way of looking at it all, eventually they're going to have to run out of money, or they're going to have to steal far more from us to make any of this viable. It just doesn't seem sustainable.
Absolutely.
And I don't think you need a university degree to be able to see it. People I'm talking to now are saying, "Oh, my grandkids are going to be paying for this current catastrophe," and I can't say to them, "No, I don't think that's correct," because I'm sure that they're going to be paying for this forever. And UBI is a terrifying concept. I mean, if everybody's got $1,000 guaranteed every week, that $1,000 is going to be worth less and less and less and less year on year. It's got to be. There's no value to it because it's not rare. Value comes from something rare or unique or different. But if you know you're going to get that $1,000 every week, well, all the businesses accordingly, the prices are going up. So a cup of coffee, if everybody's got $1,000 guaranteed, a cup of coffee won't be $5 from a cafe. It'll be $9 or $10. And in my head, it'll just dilute down to being worthless anyway. I could be wrong. You're far more versed in this space than I.
I think that is the way it unfortunately plays out. And so those of us who want to protect ourselves will look at ways of saving some money inside Bitcoin. And that's where within the Bitcoin world, we talk about this idea of stacking sats, right? It's dollar cost averaging. It's not, you're not trying to time the low and sell at the high or anything like that. You're just every week or every month, just with some leftover money, you're just buying some Bitcoin. And that's why I'm a big fan of some of these services that offer this dollar cost averaging service. So in Australia, there's one, they're launching pretty soon. They're called Bitaroo, BIT-aroo. Now you do have to KYC with them though, so that, as we mentioned earlier, that's a privacy thing. So those who are more privacy conscious, you can't really dollar cost average or auto buy. Another one, as I mentioned in the last episode, was GetAmber. So I think it's getamber.io. They offer that as like a regular sat stacking service. Again, that's a KYC service. But yeah, otherwise look at places like HODL HODL or BISC, BISQ. Those are ways to acquire in a non-KYC way. Or you can, hopefully, it looks like the restrictions are slowly going to lift and there will be some Bitcoin meetups. And so people who are interested, often newcomers are welcome. And we usually try to teach you there. Like I actually am one of the organizers for the Sydney meetup. And there are meetups around Australia and around the world, really. But yeah, so that's another option for people.
When the restrictions are lifted, we'll run an ad and let everyone know when you're having a meetup, and those who are interested and keen can jump in. And those who aren't, well, like, I mean, Sydney's 4.5 hours away from me at the moment, so I won't be scooting up there for an hour meeting, but then we'll see how it all plays out. So, all right, Stephan, mate, that'll do us for episode
principles,
4.
what it's about learning something new
next week for episode 5,
and doing it from a very basic standpoint. So, mate, I've been going through, I've checked out Hodl online. That was a pretty interesting way to go about things. I've checked out some of the other platforms. It all looks very interesting. And as we were discussing this morning, a relative of mine received what I'd call spam, but I figured it's a perfect thing to slide in on, because that's one of the areas that scares people from this space is the scam. So she was offered 24 hours to make $13,000 if she gave this company $100. Now, does it sound legit? Should we do it?
Of course. And I think this is a great topic to lead into, because while Bitcoin itself is not a scam, there are many scams that are peripheral to Bitcoin, because they're kind of trying to latch on to people's desire to get rich quick, right? Bitcoin is not a get rich quick scheme, but there are a lot of people selling this kind of, just put in $100 and you can make 10,000 whatever % return. Like, it's obviously BS, right? But I think it'd be good to talk about some of the common scams in the space and how to avoid them for your listeners, right? So some of the main ones are, if anything, they're not directly Bitcoin. They just pretend to be about cryptocurrency trading or mining or whatever. And they say these things like, send us $100 and we'll send you back $1,000 in a week or some. Obviously, if it sounds too good to be true, that's probably the case, right?
Probably is. Now, in saying that, as an example of what doesn't seem shonky, now you transferred $10 into my new Bitcoin wallet here, probably 4 or 5 weeks ago now, and just for the audience, we're at $13.74. Now, as a percentage, that's a pretty impressive little investment. I mean, in dollar form, you go, you've made, it's $3.74. But on a percentage basis, that's a pretty excellent little return, really.
So we timed it well. So that, I think longer term, I think there's huge gains to come. And the way I approach Bitcoin is really, I'm thinking of ways to accumulate Bitcoin, whether I'm earning Bitcoin or I'm buying Bitcoin. Obviously, for you or your listeners, it depends on what's the best way to acquire it. But I think if you just regularly acquire small pieces at a time, that's really the best non-scam way to kind of don't fall into the trap of these scams. So let's kind of list out a couple of the kind of big scam categories, if you will. So one of them is some of these, what I'm going to put into the category of kind of like Ponzi schemes that are built around Bitcoin, right? So these kind of like, send us this much Bitcoin and you'll get 10,000% return back. No, what you need to do is go to an exchange or go to a service and buy Bitcoin or earn it and just regularly accumulate it that way. And your return in the longer term is more about holding more Bitcoin. And it's about being part of this new Bitcoin economy if you want to be able to spend and transact in it. Another common scam is this cloud mining scam. So they'll say things like, we'll mine Bitcoin, you just pay us money and we'll mine it for you and then pay you out with the Bitcoins. And basically, there's a lot of cloud mining scams because people, the first thing they've heard of is like, mining, that's how you get Bitcoin. Okay, well, I'll just pay someone and they mine for me, right? And so to an innocent observer who doesn't really know that ecosystem, there's a lot of, basically it's just rife with scams. So
which at some stage we are going to have to tap on the whole mining concept in and around Bitcoins, because first thing that pops into my head when I hear mining is a bloke with a pitchfork and a shovel and high vis gear and a hard hat. And I'm fairly confident that in this digital space, that's not how this works. So at some stage, we'll have to get right into the whole how the mining works and how it translates to real world time for people to be able to understand what it is.
Yeah. I think that'd be a great topic for next episode, so we can do that. And so I guess in terms of main scams, so you got OneCoin, you got cloud mining. So OneCoin is another good example of like one of those like things that pretended to be like a cryptocurrency, but really it was just a scam, basically. And they managed to scam millions, if not, I think billions of dollars from people. because essentially a lot of people didn't really understand, and they had a big marketing budget, and they went and scammed a lot of basically newbies to the space. So like these people thought they were getting a real blockchain and a real cryptocurrency, but it wasn't. It wasn't actually Bitcoin, and it was just basically an altcoin. So my general steer for this is I would steer you away from any altcoin. Basically, if it's not Bitcoin, ticker with BTC, it's probably a scam, or it's probably very, very questionable. That's basically the high level way to think about it. So the way to think about it is many of those scam altcoins have made some kind of security trade-off, or they have some kind of benevolent dictator who you're relying on, and they could just print more money up if they wanted to, or they basically are just kind of like they're pretending to be decentralized, basically. And they're not really decentralized. So it's kind of like a decentralization theater, right? They're pretending. Whereas Bitcoin is the only one that's really actually decentralized. And it's decentralizing further over time as well. Also, actually, while we're here as well, we should talk about the halving, which is a very important event. It's coming up next week.
Yes,
so
we discussed that last week. And I've been sitting there going, what in the blue hell is a halving of a Bitcoin? How does it work? And what implications will it have on the whole space?
Great question. And so when Bitcoin was formed, it started in early 2009. It had a schedule of Bitcoins being released. So in the early days, I wasn't around then, but it was releasing 50 coins every 10 minutes on average, because that's the blocks. And we'll get to the blocks part next week when we talk about mining. But basically, those blocks are part of how the miners get rewarded for successfully mining a block and adding to the system, and also helping secure Bitcoin against outside attackers. Now, the schedule is such that every 4 years, that block subsidy, which is a component, is halving. So in the first 4 years, in that epoch, it was 50 Bitcoins every 10 minutes on average. Next was 25. Next was 12.5. And now we're going down to the 6.25 Bitcoins per block. What that does, now there are many within the industry who believe that this is part of the 4-year cycle aspect of Bitcoin, and tradition, like at least looking historically, we have seen big price rises come after the halving. So typically 6 to 9 months after the halving is when we would see like these big bull runs. So that's why a lot of people are very bullish and very excited for Bitcoin. And this is kind of like New Year's Eve, like it's a big kind of, but it happens every 4 years in the Bitcoin world. So there's a lot of Bitcoin halving parties that are going on, and there'll be like live streams and things on. Obviously, with all this COVID stuff, it'll be done virtually. But in past years, it was done like people would meet up in person and have a halving party and drink together and stuff. So
any excuse, mate.
That's right. So there are a range of online streams happening for this coming halving. I'll be a part of some of those events. And so I guess just to give you a perspective in terms of like price and like what typically it has done, because Bitcoin has gone through these big kind of up and down cycles, but pretty much every time the new high is higher and it crashes down to a new low that's higher than the past low. So for example, when the first halving happened in like mid 2012, the price is maybe like $7 or $8, like something in that range. And then in 2013, what did we see? We saw a run to 260 and then a crash, and then a run to 1,000, 1,200 and then a crash. Then the next halving was in mid 2016. And at that time, the price was, I don't know, a couple $100. And then what did we see in 2017? The big run to 20,000 and then it crashed to like 3,000 in US dollar terms. This is so as we speak today, the price is sitting around 9,000. So, or a bit over $9,000 US dollars for one Bitcoin. And remember, you can buy a fraction of a Bitcoin. And so many are anticipating that potentially next year we'll see a very, very much higher price for Bitcoin. And so many of us
30,000, 40,000, and then drop back down to the 15, 20,000 sort of thing in theory.
Something like that, yeah.
As a guess,
there are some people who are speculating that it'll go to 100,000 and then crash down to like 30,000, let's say.
Yeah,
that's
right.
kind of the rough number.
If you're buying it at 5,000 or 10,000 or whatever, it's 100,000 is nice.
Yeah, of course. So I mean, but again, I want to be clear. It's not a get rich quick scheme. It is something that you can, speculate into with a portion of income, I would say. And you shouldn't be going into debt to do this stuff, right? Like, don't be irresponsible, right? There are people who've gone into debt to do this stuff. I don't, for me, it's more like, I think it should be part of an overall strategy that where you try and save up and have low debt, and periodically you just buy small chunks of Bitcoin, and that's psychologically the better approach in my view. So yeah, so I guess let's kind of summarize it up. I would say stay away from anything scammy, anything without a reputable name in the space, and stay away from these anything.
That, yeah. Who are your 4 or 5 key reputable brands, names? Who do they need to be looking for?
Yeah, so I would say if you're in the Australian market, look at some of the well-known companies. I would say look at Independent Reserve. They're a big well-known place. Hodl is a good one. Bisq, BISQ is a good decentralized platform. Amber is a well-known like Bitcoin-only service. There's a new one actually starting in Australia called Bitaroo, Bitaroo. They're Bitcoin-only, and they offer dollar cost averaging. Now, I've used them in the trial period. They'll be launching in like a week or so. So they're pretty good. They're worth a look. I would say as well, in terms of I would say get on Twitter and follow some of the well-known Bitcoin people and see who they're talking about. So, for example, if you follow me on Twitter at Stephan Livera, you can see a lot of the stuff that I'm talking about. I'm always happy to help newbies who ask me about questions about who to go to and what products to use or software or wallets to use. I would say try to stay to those reputable, well-known brands, things like Ledger, Trezor, Coldcard for your hardware wallets, because basically one challenge in this space is that there can be malware or spyware, and if you install the wrong software and so on, it can like steal your Bitcoins, and you have to be careful and do a bit of research into how you're doing, how you are going about this, how you're acquiring your Bitcoins, and how you are securing your Bitcoins. But basically, you need to take a skeptical eye to what people are saying and understand, well, hang on, is that a realistic claim? Like, does that align with history? Is this a realistic claim that, I can just pay $100 and receive $1,000 next week or whatever? Or the other one is they say, we'll trade the money for you, and we've got this special algorithm and we can trade it on the markets for you and give you, like, just be very wary about that. And that's why I think if you're just like a retail, just a average, Joe, mom and dad or whoever, just think of it like you want to accumulate piece by piece at a time and always hold your own keys. That's the most important part, which means, using software like the smartphone wallet that we were talking about, or using a hardware wallet is probably the better practice once you get above a certain threshold.
Yeah, right. No, look, that's fantastic. So once again, we've knocked a brilliant bit of information on the head in 12 minutes. So thank you once again. Next week, we'll try and do a bit more of the same. We'll get into the mining and we'll expand on everything we've learned so far. I really appreciate your time, Stephan. Thanks so much. And I'll see you then.
Thank you. See you next week.
Bitcoin for Idiot, Volume 6. Oh, no. Bitcoin for Idiots, Volume 6. Stephan Livera is here with us again. I've redubbed him the Mr. Miyagi of Bitcoin, or my Mr. Miyagi of Bitcoin. He's been coaching me a little bit over the phone and via, messages this week. How are you, mate?
I'm doing well. I'm surviving the coronavirus pandemic and the government's overreaction to it.
Yeah, no, they would never overreact. Our government, they only do what's in our best interest, mate. Only what's in our best interest. It's terrifying. It's terrifying. So, mate, big news in the Bitcoin world this week. We discussed it a little bit last week, so we knew it was coming. Was this halving?
Yeah.
What effect has it had? What's the result?
Yeah, so the important thing to note now with the halving, so obviously this is a big thing within the Bitcoin world. We spoke about it last week. Now, we have gone down in terms of inflation rate. Bitcoin's inflation rate is now comparable with gold. It's like something like 1.8% every year. And every year it's going down even further. So in that sense, Bitcoin is becoming an even more hard money compared to gold. So if you think of it from that point of view, you actually are getting a better sort of speculation in that sense. You could argue it makes it better money theoretically in the longer term because it is so strictly limited and because of that stock to flow, which happened recently. So that's an important thing. And a lot of people in the community, in the sort of more hardcore Bitcoin world, are thinking about ways that we can educate people or develop the technology further and look at ways to improve the security of it as well. So these are some of the different things. So yeah, I mean, it's a really nice milestone to look back and, okay, every 4 years this happens. And so we are starting to see a lot more people getting into Bitcoin because I think we're starting to see just so many things that are wrong with the financial system today. So that's that. And I know you recently bought from Hodl Hodl.
I did. I spent $200 on Hodl Hodl, and I purchased my first little transaction. Now, it was a bit of a process. The guy I transacted with sort of talked me through it. He said, like, have I transacted with you before? And I, no, I'm technically a virgin at this, so I just wanted to try it. So we, he sort of messaged me through it. We did it, and so there's little $200 worth of Bitcoin sitting in this wallet of mine that's taken a nosedive straight away. Funnily enough, so I was in hysterics, really worried about it. No, I'm only joking. I wasn't at all. That's the nature of any investment is the ups and the downs of it, and that's why when we talked about the scams last week, I actually thought it was kind of good that it dropped early, because you can sort of show people that no, you're not going to make $1 million instantly, and if anybody's telling you you're going to, they're probably lying. But I'm quite happy with watching it, how it's been progressing. I watched that $10 of yours for the first, what was it, month nearly, and it went up and then it went down a little bit, and then it'd go up and went down a little bit, and now obviously the numbers just increased that little bit. So it'll be interesting to watch again, and I'll keep buying little bits and pieces, and we'll just see what happens. And then once the halving explosion happens, I'll retire a millionaire. Isn't that how it works?
That's right. Yeah. No, I think you make a great point. You've got to remember, it's not get rich quick, right? This is about freedom, and this is about the longer term. So you want to think of it like, instead of keeping your money and your value inside things that are easy to make, you want to keep them inside things that are hard to make. And so fiat money, Australian dollar, US dollar, they're printing a lot more of that. So you don't really want to keep too much value in there compared to other things that will be provably scarce. And that's the beauty of Bitcoin. So that is why, it shouldn't be seen as like, oh, you just buy this thing and then you just become rich, right? It should be seen more like it's a longer term thing, and you want to accumulate pieces of it, piece by piece, every week or every month, whatever. And over the medium to longer term, you'll see returns out of that, and people will be free because you're participating in a system where you can spend and receive freely, and there's no sort of government or person stopping you from transacting when you're in the Bitcoin world. But I think a good next step is to start thinking about security as well. So a phone wallet is a great way just for day-to-day amounts, right? Like even $100, $200, whatever, right? You can keep that there because you might walk down the street with $200 in your wallet, whatever, right? Most,
although don't walk down the street with more than 10,000, otherwise you get arrested for proceeds of crime. Nothing over 10 grand, remember?
That's right. Yeah. Well, that's asset seizure is a problem in today's world.
Isn't it just?
Yeah, that's quite unfortunate. So I think the way to think of it is, you keep your phone wallet for a small amount, but then once you or your listeners are starting to accumulate bigger and bigger amounts of Bitcoin, you want to start looking at a hardware wallet. Now, there's lots of different ways you can get into it, but typically the way I would recommend for a new coiner, a person new to Bitcoin, is to look at a hardware wallet. So some of the best or some of the well-known options for a new Bitcoiner, this is one example. This is the Ledger Nano S. This is another one called the Trezor 1. So they're some of the ones that are good for new Bitcoiners. And then my personal favorite hardware wallet is the Cold Card. So that's still in the pack. I haven't opened that one out, but you can see it kind of looks like a little calculator. These ones, they're sort of like a little USB stick, if you will. And the reason we use these hardware wallets is that they are a specialized device for holding your Bitcoin private key. So remember at the start when you set up your phone wallet, it gave you 12 words. Well, you'll get a similar process here. It'll give you like 12 or 24 words when you do it. So basically with these ones, the Trezor or the Ledger, you plug it into your computer. And for Trezor, you go to a website. It's called trezor.io. And there's a wallet website that it's like a wallet, just like your smartphone one, but online. And then with Ledger, they've got an application that you download to your computer or to your mobile app as an app. And so that will give you, and then again, you do the setup process and then you write down those 12 or 24 words. Now, coming back to the reason why we do this, the reason is security. So because our online connected computers, like our laptops and our desktop PCs, typically they have malware, right? There's like spyware or some, it's easier to get hacked remotely. The reason we have these devices is that they keep the private key segregated onto this device that's inside here. So it's kind of like a little USB stick. And then that means whenever you need to do the transaction, you actually have to plug it in and send, right? So if you need to spend Bitcoin or receive Bitcoin, and you can plug it in and copy the receive address and then tell the counterparty who you want to receive Bitcoin from, hey, send your Bitcoin to this address, which is my address that I have on my Trezor or my Ledger or my Cold Card. And what it is it's segregating out the part that's important, which is the private key. So hopefully that makes sense.
Yeah. So obviously it means you've got the thing. It's not plugged into the internet all the time. People who aren't Bitcoin and tech savvy are always worried about who can hack in, who can log in, who can steal my shit. And obviously there's a reason for all that. And this is the device that protects you from that. In a very layman way of putting it. So you have your Bitcoin, your link is attached to your little device, and unless it's plugged into your computer, no bastard can look at it. Is that the general gist?
That's the basic idea. I mean, there's a lot more kind of technically involved with it. But the basic step, I would say, for your listeners who want to get started is just order one online. So you want to order it. The best practice is to order from the hardware manufacturer website. So for example, Ledger, that's ledger.com. Trezor is trezor.trezor.io. And then for Cold Card, that's at coinkite.com. For CoinKite, I actually have a ref code. So you get a discount if you type Livera, you get a 5% discount there. So, but for the others, I don't have a code. But I mean, I would say, look, if you're a beginner and you're not sure what to go with, probably go with the Ledger. They're not paying me for saying that. I think Ledger is probably just an easy one for beginners. But then once you get more advanced, then you might look at, say, the Cold Card. The other thing you've got to think about as well is having a backup. So remember how you write down those 12 or 24 words? Yep. You've got to think about what happens to that backup if I lose it. Because remember, you can't back it up onto online computers because, again, that's the private key. That's the information that can generate the private key. So you got to keep that secure. So you don't back it up onto a computer. You need something manual. And so a common one that people use is some of these steel backup products. So this is one example. It's called the Cipher Wheel. There are others. So you can get a Bilfodl or a crypto steel. And what they are basically is a tool to back up those 12 words or those 24 words. And so this one works like you put in like tiles and you get the tiles and you slide in 4 letters for each one. And so that way it makes it fireproof, right? So let's say, for example, I've got my Trezor, but then, and I've got it in a safe at home or whatever, but then my home burns down. Yeah. Or I've lost my, unless I had that piece of paper as well somewhere else, then I've lost my money. So you need to keep it back up. And that's why these steel products are there, because they are there to help you in case of fire or in case of some kind of, emergency like that.
Extreme outcome, you grab that and you're sweet.
Yeah. So I would say, the way typically to start is, so order the hardware wallet, then write down the paper backup. Normally they give you a little paper, you write it down that. And then once you are ready, you want to look at a steel backup product. And so that is how you think about that. And then also you want to think about, well, look, we don't want to think about these things, but look, we're not going to live forever. So make sure your family knows how to access that. If something were to happen to you, if I got hit by a bus or whatever, make sure that, your kid or your brother or your sister or your parents know how to access that, because that's going to be money for them that they need to know how to access. So just think about it.
Which makes a lot of sense. You don't want to sort of pass away. And, well, I mean, with regular fiat money, I suppose the banks will be pretty quick to let you know what your family gets and what they don't get, and the government will stick their nose in. But it probably wouldn't be bad if for your kid or whatever, you sort of, oh, by the way, kiddo, here's in your will, open this little catcher, contraption, log in there, that's all yours, son, go for it.
Exactly right.
Nice little non-taxable nest egg. Not that I would ever recommend avoiding tax, but I certainly recommend minimising it every opportunity.
Spot on.
It's not like they spend it particularly well, let's be fair.
That's right. That's the immortal words of Kerry Packer. I think he was saying, it's not like they're spending it that well that we should be paying them any extra. So.
Paying them any extra, that's right. And he's 100% spot on. Probably one of my all-time favourite 8-minute videos is watching Kerry Packer decimate that committee. And it's a beautiful 8 minutes on YouTube. If anybody hasn't seen it, well worth watching, and it's a fairly solid analysis of how it all works. So, but yeah, look, mate, I think that's a lot for people to digest for this week. So what we'll do next week is we'll start. We'll keep an eye on where mine's up to. We'll see what happens there with this halving business. When does my $200 turn into $100 million? How long?
So it depends what you're looking at. I would say depending which kind of modeling, and I mean, there's different people online who are doing different like charting and analysis or quantitative analysis. There are some who believe that so today, as we speak, the price for Bitcoin is maybe a little under $9,000 for one whole Bitcoin. That's 100 million sats, 100 million satoshis. There are some who believe that it'll be $100,000 by the end of next year. But there are some who believe, no, that's overrated. It's not going to go that fast. So, I mean, really, you have to just take a long view, and that's really the short way to think of it.
Oh, of course. Oh, it's just interesting to have a look and learn all about it. I actually watched some John McAfee videos the other day talking about all these sorts of things. And I mean, for any libertarian, he's a funny guy to watch. Like, if nothing else, he's absolutely crackers, but he's interesting. All in the same vein. So anyone who doesn't know, John McAfee kind of invented McAfee spyware and antivirus computers, and he's also a complete and utter lunatic. But he does love the crypto space. He seems to be pretty interesting and fun. So at one stage there, he was talking about he's going to eat his own penis if Bitcoin didn't hit certain points and all sorts of things. So crazy guy, mate. Crazy guy.
That he is. Obviously, he stepped back from some of those comments, but we'll see. We'll see what happens over the next few years, right?
Well, that's it. It's all good fun, mate. But no, look, thanks as always, Stephan. It's great to have your time for a few minutes on the show and talk about Bitcoin. We might actually do a couple more in-depth specials. You've also got a couple of events coming up. I've shared them all on our Facebook page, where you're a keynote speaker or a guest speaker. So.
Awesome. Thank you very much for that. Yeah, just a couple of different Bitcoin events. Most of them are free, if anything. So they're just online registration. One is Chain Talk. And yeah, they're the upcoming ones. And another one is Value of Bitcoin. That is a paid one. That's an online conference as well. So yeah, there's a few of those events. Basically just follow me online at Stephan Livera, and you can see the links for those kinds of things. Yeah, brilliant. All right, mate. So look forward to talking to you next week. Awesome. Thank you. Thanks for having me. Always a pleasure.
Hope you guys enjoyed that. Stay tuned for next week where we have our final Bitcoin special. Bye.